Welcome back, dear traders. You're watching a recap of the American session. Today, trading on Wall Street is driven by speeches of Fed policymakers, fresh labor market data, and forecasts. In a pre-market trading, the US benchmark indexes were trading in the red zone. At the close of yesterday's session, the Dow lost 0.5%, while the NASDAQ dropped 1.25%, and the S&P 500 slid by 0.75%. In today's pre-market trading, the main US stock indexes incurred losses, and they were rather volatile, declining but then moving up again by approximately 0.1 and 0.2%. The S&P was fluctuating in the intraday range of 4,250 and 4,340 points. The Fed minutes published on Wednesday did not contain anything new, so the market reaction to them was rather muted. However, investors are not so sure now that the Fed could slow monetary tightening in the near future. According to the minutes, Fed policymakers attending the July meeting said that interest rates should be maintained at a sufficiently restrictive level to cap galloping inflation. Today, after studying the minutes, analysts have given a rather different forecast. Some of them reckon that it's quite unwise to anticipate a shift to a soft stance given soaring inflation. Others argue that the Fed Chairman Jerome Powell needs to shock the market to tame inflation. Bank of America believes that the minutes from the latest meeting suggest that the central bank could hike the interest rate to at least 4%. And the US dollar index has extended gains today. It advanced by 0.17%, trading at a high of 106.70. Despite a relatively strong bullish bias, the greenback is still stuck in a narrow range of 106.20 and 106.90. It's unlikely to break out of this range in the near term. It's now moving in the intraday price corridor of 106.50 and 107.20. The US dollar index hovered today near its three-week high amid the statements of Fed officials, and they discussed the need to raise interest rates to a restrictive level to lower inflation. The July FOMC minutes indicated that participants, though, thought that eventually it would probably become appropriate to slow the pace of rate hikes while assessing the impact of a tighter financial conditions, Goldman Sachs said in a statement. Still, US policymakers said that nothing about future rate hikes and just announced that they decision would be based on incoming economic data. The market expects a 50 basis points rate increase. Meanwhile, some speculators count on a 75 basis point hike and see interest rates peaking at 3.7% and staying firm at the level until the end of 2023. According to the fresh macro statistics, the number of Americans filing new claims for unemployment benefits dropped by 2,000 to 250,000, well below market forecast of 265,000. And today, investors will also focus on the home sales data and the statements of Fed officials. As for USD CAD, the pair is moving in a sideways trend today, and it's seen trading at the 1.2912 high and is expected to be in the 1.2846 and 1.2940 range. After a few volatile days, the luna is now in a flat due to the stronger US dollar and support from crude quartz, and crude started to recover when the OPEC chief said that global oil markets might face a high risk of a supply squeeze as demand would remain resilient. As the energy agency said, exports hit a record high and gasoline demand climbed to its highest level this year. Speaking of supply, Russia is gradually increasing oil production, while the European Union will impose a ban on seaborne imports of Russia crude oil in December and on imports of products at the beginning of the next year. The oil market has been under pressure lately, and efforts to restart the nuclear deal, which could boost Iranian oil exports by around 2.5 million barrels per day. Meanwhile, Bitcoin is still moving sideways. By the opening of the trading session, the digital asset gained 2.34%. It was seen trading at $23,458. The daily range for BTC stands between 22,800 and 23,800. However, should markets somewhat come down after the interview of a Fed policymakers, digital gold could rise to $24,200 or even $24,500. And this has been our daily review of a US trade. Have a profitable trading week, and we will keep you up to date with the latest events in the market. See you in our next videos.